Hi guys, welcome back to ValeTalks by Valetax. My name is Innocent Rauniferi, global market analyst and trading content specialist here at Valetax. And today I have with me my most prestigious and always present guest, Manesh Patel. Hi Manesh, nice to meet you today.
Hi, everyone.
We've missed Manesh for a couple of weeks. He's been busy traveling, one of those um rewards that you get, being a trader, the freedom you have and, the luxury of life, enjoying your time, and most importantly, being on the move while being a trader. And I guess it was very beautiful, although it had a bit of a hold up due to the whole, oil crisis and jet cost. But he's here with us today, and I'm happy to have you, Manesh, on the call. Today we're going to be doing something a bit different. As you can see, we do not have a PowerPoint on. There's no formal introduction. We're trying to keep things as simple as possible. And today we're just going to be looking at the charts and looking out for trade ideas to actually capitalize on while we are talking about what traders are really missing out in the current market conditions and situations. So we've seen the rise of fundamentals, macros. We've seen the rise of geopolitical tensions, in the market since 2025. Since like Manesh would say, the man with the yellow hair, came into power. We've seen a lot of, you know, I wouldn't really call them crises, but tensions that have influenced the markets in different directions recently. But there are a couple of things that traders are missing currently, and we want to really, look into that and see how traders can benefit from the current market conditions and not just wimp about them. So Manesh, we're going to be looking at a few pairs today, right? So I have the Nasdaq charts opened, and I'm also going to be looking at the XAUUSD and the GBP and we're just going to be analyzing them together, and then we're going to talk about these pairs, right? So first off, me is how would you say the whole I think one of the most famous or should we say infamous thing currently happening in the market right now is the dispute between the Strait of Hormuz, right? How would you say that has really affected the direction of peers technically? Because you're more of a technical analyst, right?
Yeah.
But nevertheless, I know you're well-founded and knowledgeable, and you also follow up with the news regardless of it being forex or not forex, right? So how would you say that has really kind of shifted the dynamics of chart plays in recent time?
Well, I mean, you have to understand the actions taken on the charts are where
Right.
people are putting money in.
Okay.
And, from a fundamental point of view, you have the Iran war, we could call it war, not war, some people do. Before
Yeah.
that, you had a lot of things, issues in the US and stuff like that. So the
Mm.
markets were starting to come down before the Iran situation even happened. And then crude oil started going up. At some point, these markets become passive to news announcement
Okay.
completely. So every day, if you listen to news, crude oil's up, crude oil's up, crude oil's up. A lot of people become passive, just like they did in COVID. If you think about it, during COVID, markets went down drastically in March in COVID. And then in April, they went drastically up. Why? COVID was still there. People still quarantined everything, but the markets went up. And it's because people start becoming passive and they start seeing there's discounts in the market. And then you get that fear of missing out that comes into play. So that's kind of what you start seeing now is that even though everything that's going on with Iran that's good there, it's people become passive to it. They've gotten used to the high crude oil prices. They've adjusted to things and stuff like that. And then
Yeah.
when the markets went down, the Dow was leading the markets going down on the US side. And once it did that 10% or more correction, institutions start looking for opportunities. So
Right.
whenever you start having a 10% or more correction, institutions really start looking at opportunities, things they wanted to get in, but they couldn't because it was too high priced. And that's
Yes.
kind of what you start seeing is that April 1st, the beginning of the quarter in Q2, and remember, institutions are closing out quarter by quarter by quarter. So they closed out a lot of their positions in Q1, and April 1st was the beginning of a new quarter, and we were down over 10% for the markets. So it's a bargaining opportunity for them completely. And that's why you started seeing some buying that slowly started happening and then kind of went up huge because you had a short cover rally at the same time. And that's what you're seeing now is this huge movement here. And a lot of it now is kind of taken over by that fear of missing out. So you're starting to see that there. Last year, the S&P 500 took the markets down for a 12% correction. The NASDAQ led us up in April. Again, this year, the Dow took us down and the NASDAQ is taking us up. But
Up.
we've gone up huge. So I'll be very, very careful with the charts now is that it's expensive now to buy.
And it's also tricky to sell.
It now on the buying side compared to the reward of shorting it. So you're going to start seeing people taking profit taking sooner or later, and then you could see some drawdown and pull back, and then eventually start happening with the S&P 500 and so forth. And if you look at the US 30 chart, you could actually see that the S&P, NASDAQ, and the Russell have made new all-time highs.
Yeah.
However, the Dow, which took us down, is at a major resistance, the same resistance. Can you pull up the US 30 chart, right?
Yeah.
We
So the US 30, the same distance that that started us
this is
out in the
what we're
sales,
looking at. Yeah, so if you zoom in,
the supply point.
right, so if you bingo, so if you look at that top of that supply point you drew,
Yeah.
there's a big Volta black bar there to the left. Right there. Yeah, if you draw a line at the high of that bar, yep, a little lower. No, just draw a vertical, horizontal line, not a zone. Yeah, you could do it that
Okay.
way. There you go. That's perfect right
Yeah.
there. If you look at it back in February 28 or so, you could see that we had a high, right? And
Yeah.
that high is now retested now. Is that February 28?
Yeah. February 28th.
Keep going, keep going, keep going. Keep going to right there. Oh, one there, one bar back, two bars back,
Yeah.
one more bar back. And then
It's
if you look at that date right there, that is
yeah.
what led the markets down. After they broke the low of that daily bar, the weekly low, it basically took us down, gave us a 10% correction. And if you look, the S&P 500, the NASDAQ, and the Russell made new all-time highs. However,
Yeah.
the Dow, which took us down, we got to that resistance level and we bounced right off there. So this is what I'm looking at this week. Reason why is if we hold that resistance level, then we can start to see a pullback that's going to happen. That will start happening on the Dow, which then could influence Nasdaq, S&P, and so forth. So this is what
So
I'm really looking at now because if you look at the S&P 500 charts and Nasdaq chart, the Nasdaq chart you had a minute ago, you're all-time highs. There's no previous resistance levels, nothing that's dictating it at all. The only thing
yeah.
you could really look at is Fibonacci, and you could see that with the Fibonacci, are you at the 128% retracement, and that's it, right?
Yeah.
So that's
S&P
the only
500 and the
thing you go
Nasdaq
for.
all took out previous highs,
Yeah. So you're at an
breaking new.
all-time high on Nasdaq.
Yeah.
Which really, from a fundamental point of view, makes no sense at all, considering, the Iran war is not over. Things are still in the same situation as they were a couple of weeks ago. Crude oil is, yes, it's below 100, but still flirting around close to 100. Interest rates still have not gone down. So from the fundamental point of view, us making new all-time highs really doesn't make sense at all. It's just institutional as a bargaining
Yeah.
point cheap.
And aside that as well too. So last week and the week before that, we had a lot of we had a lot of company profits earning reports rather, and we see a lot of companies in the US 30 actually they turn out to have made some profits even despite the war. So I was expecting that the US 30 as well would have created an all-time high with the earning reports and everything. I think only likes of Wells Fargo and a couple of other ones. I think Caterpillar too as well made some losses and didn't turn out good earnings for the first quarter. But I'm looking at the Nasdaq now and I'm seeing all-time highs and it's not correlating.
And if you look at the NASDAQ and you dig deeper into the NASDAQ, right? A
Yeah,
lot of NASDAQ stocks not related to semiconductors are going down. It's
yeah,
the semiconductors are taking this thing up. So it's one sector out of the whole technology sector that's taking this thing up. So it's biased right now. So the semis, AI is pretty much back into play,
yeah,
uh, back again. But if you look before the Iran war, semis were going down because of the capex, how much they were spending. So a lot
yeah,
of people are ignoring that completely. They saw the semis were cheap and they ended up buying a lot of the semis from Intel, Nvidia, MU, more memory type related type of things, which is
yeah.
biasing the Nasdaq and the S&P 500.
So aside just stocks right now, yeah,
Mhm.
how how has market conditions been, affecting commodities like XA? Because everyone's been thinking, if we're in one of the shocks that kind of happened to a lot of traders, especially intermediate traders, was the risk on, risk off parity that they usually would have, where they understand that in times of trouble, people run into gold as a safe haven, but they really didn't see that during the US-Iran Israeli conflict there, and it's been a bit confusing for them. And I've tried to explain it, a couple of times even on the call, where I tried explaining that gold was already at an all-time high. It was already too expensive to buy, and what usually investment traders and hedge funds would do is they would usually try to rotate liquidity. Now, you need to also understand the perception of the war, not just it being a crisis. So in when it comes to war in the Middle East is responsible for housing most of the oil producing, top oil producing countries in the world, right? So anything that affects the Middle East would affect oil, and there would be a crazy demand for oil due to the factors surrounding the war. So what happened was investors tried to rotate liquidity back into oil because at the end of the day, people, it's all about profit making when it comes to the finance world, right? So people knew that there would be more profits to make than keeping money and stalling money on gold because at the end of the day, gold is a hedge over inflation. And I think um, that's one thing that a lot of people forget most times is there's no so much profit making when it comes to gold than you would make when it comes to oil or you make on other pairs as much as that. So people just rotated, pulled out and started to buy oil. Hence why the decline on the XAUUSD and they saw those huge shots because those shots were profit taking. But now looking at the current situation, right? We see the back and forth between the negotiations. And every time we've had that back and forth between the negotiations, the XAUUSD and silver has kind of reacted in two different patterns. And what would you say is the cause of that?
So you're asking how like gold and all that is influenced?
Yeah, yeah.
So I don't want to, I don't look at the fundamentals as you know, right?
Mhm,
And,
mhm.
and the reason why is you sometimes you have correlations that exist. Sometimes the correlations get broken.
Don't exist. Yeah,
Exactly what you said. When there was a war going on, typically people flight to gold, in some cases crypto like Bitcoin and stuff like that too. So I think what happened was is that gold had a huge run up to over 5,000, just like silver did to over 100, to a point it got expensive. So that when
yeah,
you did start seeing the war happening, people were looking for things that are cheap, things that are moving. And
yeah,
gold sat there and came back below 5,000, really hasn't gone back above it at all. So the safety haven kind of went away. Also, if you look at retail people today, they're a lot smarter than they were before. A lot of people
True.
are trading themselves, right? So I think a lot of people are looking for bargains in the market, not going to a hedge play. So they're
Yeah.
looking at things took a hit and things like that. So semis was perfect condition where a lot of people were believing in AI, it kept on going up, 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 and then they couldn't buy it because it got too expensive. And then when everything happened, things got to a point where there's a lot of stock opportunities that were cheap and
Right.
gold was not moving, silver was not moving, and none of them were moving. So they thought that was a buying opportunity compared to gold. So I think traders have become a lot smarter, and you could see that with the money flow, not from a fundamental point of view, but from the charts and the money flow now is that you're not seeing money going into gold or any of the metals at all due to the war situation at all. People are basically looking at opportunities that are going to move. A lot of people went into defense type of stocks. They started looking at other places that were not affected with oil, people that are producing oil, stuff like that. So
Yeah.
you got a shift that's going on. And I think it's because of how traders exist today compared to before, right? Majority of people were not trading before, so they were relying on institutions, and institutions would pretty much just go to gold and keep it easy and to manage. Now what happens is you have online brokers, everything, the traders smart, they're trading their own money. So now you start seeing a shift and like, well, why do I go to gold when I could only get a 2 or 3% profit on it and inflation's going up a lot higher. So they're looking for more percentage gain, looking at individual instruments than compared to going for hedging. So I think the hedge play that you had before has gone away now, and people are looking for bargains.
Okay. So when we talk about retailers actually becoming smarter than they used to be, right? So
Mhm.
there's a lot of information out there now. Traders are starting to listen to the news more often. They're starting to also understand the use of volumes, most especially. Yeah, I've seen a lot of new traders now applying like volume indicators and all of those things into their trading, which I believe is actually one of a very good indicator to use, right? Because it just kind of shows you the amount of liquidity being ingested in the market or being taken out of the market. We see lots of traders finally not just trading naked price action, but now we have a lot of concepts that tries to help them understand where institutions are leaving the market or where institutions are pushing in money into the market. So someone just asked a question and he said, is the USD strong right now or is the USD weak? And honestly, this is what I'm going to tell you from my analysis, be it both fundamentals and technical, is the dollar right now is in a range. It's stuck in a range because of two major things. Yeah, we're trying to get clarity on if Trump is going to be able to finally sign a peace treaty that lets the Strait of Hormuz actually work effectively. And secondly, we have the FOMC federal fund rates decision coming up on Wednesday. And if you know very much well what the federal fund rates FOMC meeting decision really is, it is what sets the trajectory for the course of the next quarter when it comes to the economy of US, right? We're going to finally get to know where the economy is, if he's wanting to stay, if he wants to stay dovish, or he's going to tighten the economy, depending on how much inflation he believes the country is currently in. So we've seen the previous PPI and CPI actually turn out better than expected. So we're hoping to see what Powell is going to do. I think this would be his last FOMC, right? Before he resigns.
Well, resigns. We'll see if he gets removed or what happens, or
Yeah,
if he does. There's a controversy in the U.S. of what will happen, but let's
yeah.
go for assuming that
So,
he's going to be gone.
yeah, but right now we're just looking at, because a lot of people are hoping that Wash would Wash is on Trump's peak. for the next Fed chairman, right? So we don't know yet, but we're just going to watch and see. But so yeah, so FOMC is at hand, and it's a very, very decisive macro report when it comes to be it forex, anything, because it relates to the economy. If Trump signs that, will that be good for the dollar? Yes. If he signs a treaty, to actually allow things, it would be good for the dollar because that doesn't only take off pressure from the dollar, but it also signals stability. And one thing we need to know is sometimes investors aren't just looking for strength, they're looking for stability. So that's why you see that during crisis, the investors tend to run into safe havens, right? They tend to run into risk off pairs and risk on pairs too as well. So you see things like your CHF getting stronger, your NZD, and because these are more stable places, right? As long as nothing happened, none of the crisis is affecting their economy, if it's a more safer place for investors to go keep their money, earn their 0.4% or 0.5%, and they're good with that. So it's better to get their money safe than to risk their money on what they are not sure about. That's the difference between, smart investors and we retail traders. We just want to throw, our money anywhere, right? So that's one of the major things you need to keep in mind when it comes to the dollar. I think someone also asked another question. Let me quickly see what that question was. So
Why
why
you
did the US 30 fail to hit all-time high? That's the conversation we're having at the start of the call. Yeah. So um it's a bit tricky, like Manesh said. We see the Nasdaq, we see the S&P 500, most of the US indices, yeah, all created all-time high except the US 30. And he was saying something most importantly, and he said when you look at it and you look at the historical data as at when the last all-time highs were created. Nasdaq failed to create an all-time high. S&P failed to create an all-time high too as well. You said US 30 gave a deeper pullback and created an all-time high. But right now we're looking at earnings that have supported the Nasdaq as well. But not only that, but also the people who came into the retracement of the US 30 due to the whole AI bubble and everything. But majorly, most of them were on the AI side, and that's on the Nasdaq. But for the US 30, we also need to understand that it's a weighted index of companies who are not directly involved with AI stocks. So we still have likes of Walmart and all of these people, and they're not dealing with US stocks. They're just normal business people. And in terms of the current war and crisis, it kind of affected their earnings and profit portfolios due to supply chain, most importantly, and also cost of production and business maintenance too as well. So those are some of the things that likely could have also held the US 30 back from actually making as much profit. And remember, we have Apple, as one of those companies, and we see Apple, also suffered a hit, from its transfer of split production in China and in India right now because of they're trying to manage cost. And as well, they don't want production inflation to be too high for them. So things like this could also have been one of the reasons why we didn't see US 30 actually get that strong boost. It did move quite heavy too as well to the upside. Manesh, anything you want to add to that?
Yeah, so let me address both of them. So US 30 failed exactly what you said. It's not, a lot of the Dow 30 companies are not related to AI,
Yeah,
right? So that's the reason why it hasn't gone up. And like I said earlier, if you look behind the scenes of NASDAQ and the S&P 500, there's a
yeah,
lot of stocks that are not making all-time highs. The ones
yeah,
that are related to AI are. So even though the indexes and the futures look like they're drastically up, there's a lot of companies inside those indexes that are not making all-time highs. The ones that are biasing the index. So you look at the semiconductors, they're completely biasing those indexes where they look extremely bullish, but if you look behind the scenes, they're not really that way. Okay. The second question was the dollar, US dollar. If you look at the US dollar, April of last year is when it entered this range, exactly what you said, Ryan. It's
yeah,
entered a 200 pip range. If you look at all the dollar denominated currencies, especially Euro USD, you've
yeah,
over a year now, you've entered close to a 400 pip range, and you're just bouncing up and down, back and forth between the range. And if you look before the Iran war, Iran and Venezuela happened with the US side, the dollar was getting weak. After
Yeah.
Venezuela, the dollar started getting strong right there, started
Was
going
actually
up, up, right? And then when the peace treaty, news of the peace treaty started happening, the dollar started getting weak and it started to look like it's trying to come back and retest that low. So
yeah.
you're just ranging right now. You hit the high part of the range. You're at the middle part of the range. Last week we had a gap up and then came right back to the middle of the range. So there's high probability we're going to hit the bottom of the range. If we stay at the middle and then start to go up, that's a sign that the dollar's going to break out of the range. So if it
Right.
doesn't hit low as you show right now, the bottom of the range in that chart, right, and it just stops here at the middle and then start to come back up to the top, then it could break the high and the dollar could break out to be bullish. Okay,
Yeah.
right there, but it could break out to go bullish. But if it breaks the middle of the range and starts to go lower, then you're still going to be consolidating within a 400 pip range. So, you know, yes, you've got the treaty behind it. They've got the Fed changing. There's so much stuff on the fundamental side. But as far as if you look at the money flow from the charts, you're just consolidating in the 400 pip range. As a trader, the best times to trade is at the top of the range or the bottom of the range or the middle, which you're kind of at now. Because the middle can make a decision to go up or go down, and that's a 200 pip range that allows you to get a good reward risk ratio. So, last week was not a good week, but if you look at 4 weeks ago, it was a perfect time to bet on the dollar getting weak because you were at the top of the range. But we're just ranging right now. Um, signs. Trump could do various different things, and you may get one type of reaction and another type of reaction. You just got to look at the chart and see what type of reaction you're going to get with the money flow. Because if people are predicting Trump to do certain things, then you may have the market already moving before he even talks. If it's a surprise, then you could see it. But as far as the dollar is concerned, I'm not looking at the news or anything like that. I'm just looking at the charts, and the charts right now tell me at the middle of the range of the dollar, and it could go either way. Maybe
Yeah.
this week it'll decide which way it wants to go.
Go.
Yeah, so if we break the weekly low, then we're going to go retest the bottom of that range. If we break the weekly high, then we're going to test the top of the range. So I'm just looking at things simple to determine what it wants to do.
And I think another thing that traders need to remember in this time here is we are in one of the most volatile times in the market. Now, volatile not in the sense of not in the sense of, major events happening at the same time, but we just have one man that has always shown his strength. Even the first time he was president, he showed everybody how much, power he has to actually influence, you know, um, the markets and, economies and all of those things. And we see a tweet from him actually making the market go volatile. Manesh, I don't know if you've noticed this, but just before, I think that would be midnight your time. No, we didn't know
Mhm.
that would be night. I think probably in the evening after the banks close. Um, so probably about maybe 7 p.m. your time. Trump says something and we wake up and we see that, markets is gapped and all of those things. And
Yeah.
he's done that consecutively every month since he came into power. Like there's always a gap on the weekend. He says
Yes.
something before the market opens, and that's exactly what we've seen. So you see that kind of level of volatility, and you understand that as much as technical analysis, is important, it still keeps you on track, right? To tell you where the direction of the market is heading towards. But there's always room for us to keep in mind that Trump could say anything. Trump
Yeah.
could Trump could bluff the whole world and tell you the Strait of Hormuz is open and the market goes volatile, and Iran comes back 2 hours later and say, you know what, we never spoke to this man. So things like that, I think you also have to, keep in
It's been
mind. So
happening a lot.
it's been happening a lot, and you don't want to blame yourself. You don't want to put yourself in situations where you feel like it's your fault, but it's where you then need to trade carefully. Yeah, you want to make sure that there are a lot of things, parameters set in place that protect you and your capital, most importantly, during this period. And you want to find out, you want to find the best possible opportunities that doesn't allow you stay in the market too long. And if you're staying in the market for a very long time, then it means that your risk has to be properly managed. So it means that every point in time, you have to be on the side where you're not losing if you can, right? Because truth about it is your broker can't help you in such situation when the market gaps. Slippages are not controlled at the opening of the market. It's nowhere being controlled. Those are liquidity gaps, right? So it's where buyers are trying to catch up with the previous sellers, and there's always a gap between them at the close of the market. So your broker can help you here. It would definitely have to execute the most orders. So if it's at the highest price, then that's where the market opens at, right? So you always want to protect yourself, because a lot of people always, try to blame it on the broker. Oh, I left my trade overnight and then there was slippage. And sometimes it's not slippage, it's just that indifference between the huge indifference between buyers and sellers. So there's something you will also need to know is there are people who do have the powers to actually take place positions before the market opens, and they leave those positions there. So it's that indifference that causes, that gap that you see on your chart. So yeah, that's just another thing I wanted to put out there. So looking at the XAUUSD, right? So let's look at the XAUUSD for the trade for the XAUUSD this week. So for the XAUUSD this week, we see that the XAUUSD shifted bearish. Our failure to close below the previous week high. Okay, so this was the previous week high before last week. We failed to break above it, which was this previous um support level two here, which was the 4,880, 4,850. We saw April 13th move into this level and fail to close above it, but not just once, but twice. We saw it at the start of the month, we saw it at the middle of the month, and we also see last week failing to finally even go above the candle close, not even the high of last week. And then we had this bearish move back down. So what we're going to be looking at for the XAUSD this week is hopefully to stay bearish, but we also need to get clean confirmations for that bearishness, right? So we see some sort of rejections at the 4,665. But one of the major holding floors when we come to the daily time frame, when we come to the daily levels, yeah, we see is the 4,700. Okay, the 4,700 has been a very solid floor. It's acted as a support, and also acted as a resistance at this point here. So if you notice from my other chart, I was looking for a break below this level, and we don't just want any type of break. We want a solid break. So we're looking at the current 1 hour candle to close fully bearish. And then we then want to take the trade on the 15 minutes time frame. So we've gotten a close. You see how the 4,700 level also acted as a floor this morning. Yeah, so we had this act as a floor this morning as well. Now we've gotten a break below it. So we're going to be looking to take shorts. Remember, this is a trade idea, not a trade signal, right? So there's no guarantee for success. So when whatever you're doing, if you're taking this trade as well, don't forget to apply proper risk management. All right. So we're all traders here and we're not gamblers. So you always have to keep that in mind. So we're looking to go short on the XAUUSD intraday, and we're looking to target the previous lows at this point. This will be our TP1. This would be the first target for intradays, and then the second target, and possibly even lower, depending on what the current conditions of the market will bring in at the opening of the New York session. And that, so we might still get possible range here. All right. And that's why we're managing risk with just above this previous highs. You don't want to keep it too close, because we might just probably get a sweep and then return. So you want to manage that carefully. And when we get to this level and hold again, right? So this is where you want to make your entry from right now. After, don't forget, that would be after the 1 hour candle closes, because right now you see it's still struggling. Okay, so we want the 1 hour candle to close as a full bodied candle, and we want it to close below the previous 1 hour candle too as well to confirm those bearishness. Then we can go short. Okay, so that would be the trade idea for today on the XAUUSD. Manesh, do you have any trade ideas on the S&P 500?
Yeah, so let me show you gold. Can I share my screen real fast?
Mm-hmm. Okay, so you can share. I think we stopped sharing.
It's not letting me share my screen. You probably have to stop sharing.
Okay, I've
Okay.
stopped sharing. Can you try now?
Yeah.
Okay,
So I'm just going to use here gold here. We talked about gold being short.
right,
If you look at a lot of social media, a lot of people are talking about gold from a Fibonacci point of view. And
right.
they're looking at the point right here, right there to going down. And if you look at it here, this is pulled back to 61.8,
Point
which is
eight.
the level. So this
Yeah,
is your mid level right there that pretty much gold has been holding. It held it there, kind of sat there and held it a whole bunch of times here.
yeah,
So a lot of people are talking about gold being short based on that level there. And the key level north of this to completely start to go down is going to be this level here to 38.2. So this could be the new range, but it's got
yeah.
to break level here, which is around 46.40 completely.
e-
So that
Exactly.
is level there. And if you look at it from a different perspective and why, I'm just going to remove this and then draw a different way of Fibonacci from here to here. And this shows you that this level here, the 38 is going to be critical.
Could,
If it
yeah,
holds the level and then starts to go up, this
yeah.
here is pull back here to go up. But
Go
so
up.
that level here is going to be very critical to see what happens with gold. Will it break out of the consolidation pattern? That's the
Or
question. Or will
stays
it
in it.
sit there, break that level to retest this low and to retest that volatility spike? I really
Mm.
believe to break this level here, and I think we're going to go retest this volatility spike in the next couple of weeks. So
And
that's
also, yeah, and also when you look at it the way you just did, right? You know, at the start of the call, when we're still doing our checks, I told you that for me to confirm the bearishness properly on XAUSD, I would want to see a close below the 4,650 level. Remember, I
yeah,
said that. So the
yeah,
4,650 remains the actual holding floor, right? For the bulls long term, not 4,700. So I believe we're stuck in a range between 4,800 and 4,650, that range. And also when you look at it too as well, you could see some sort of so I don't know how much you trade patterns, right? I like to trade patterns a bit. So you could see some sort of bullish flag pattern happening there. So we had this huge move, then we have the current, accumulation happening, that range between 4,800 and 4,000 and 650, right? And when we look higher, we see that the actual supply that started the sell-off, right? After the first profit taking that happened that brought prices back to 5,000. We see the supply that started the sells for the XAUUSD back to 4,100 at 5,100. 5,100, 5,200. There's a green box to
yep,
your, I don't know if it's my left or to your right, and I'm believing that could have been a black box. So let me just annotate.
right here.
Here. No, up. Go take your chart higher a bit for me.
Take a higher like this.
No, no, lower, sorry. I want to see that. Here. So here. So we have it at this point here. So so I'm sure if we use your black box, if we use your black box system, that probably would have been a black box.
Yeah. And if you look at the whole architecture here, right?
Yeah,
And you let's say you go from here to here, right?
yeah,
You're still did not
uh,
get you past 50, you went to 60. But if you look
yeah,
at everything here, and there's different perspectives from a Fibonacci value, and you can see different people talking about this on the web, right? But if you took from here to here, right here,
We're still at discount levels.
yeah, you could see that we pretty much came here and we retraced at 50%. So this is still, it didn't go to 61.8. If you look at the highs and lows, it went to 50%. So this is still strong bullish. Uh, sorry, strong bearish. And that's why I think this, we could, if we break this level here, we got a high probability to retest this spike. And the
Yeah.
way the spike is that, the way it closed, it tells you that when it's happened here, since it's still closed bearish, there's still a high probability to retest
So
these
yeah,
spikes. If
yeah.
this is closed bullish, there'll be low probability. But considering that
True.
this closed bearish, there's high probability that in time we can retest that spike. And that's kind of what we're looking for.
Yeah. Another thing we can also see here on the XAUUSD Manesh is we see the USD creating some sort of pattern movement, right? So we had this sell-off the first time, yeah? This sells
Mhm.
here. Then we had
Yep.
this correction. Then we had the next sell-off. Now we're having the same similar pattern, right? So we have another bullish correction. And now also looking for that sell-off again. I think you zoomed your chart, so let me
Sorry.
delete.
Sorry.
Yeah.
Sorry, I moved it.
So we had this sell-off, the first sell-off, then we had the correction, then we had the sell-off again, and now we see similar correction.
Yeah.
So we could have this as well. So hence why the bearishness, kind of looks formidable when you look at the XAUUSD. But let's see how it works out. But I still believe that a break below this level would be the perfect place to actually go short from.
Believe it or not, Ryan, what you drew was an Elliott wave pattern.
Yeah,
So look at the Elliott wave pattern. There's your three, there's your four, there's your five, right? And then
yeah,
there's your A, B, C. And now
yeah,
if you look at the reverse angle, this is your three wave here, there's your four, and the five is gonna have a high probability to retest that low. So looking for Fibonacci or Elliott wave, any technical angle, you could see that this is still bearish and a lot of people are looking a lot of technicians are looking to short this to retest that volatility spike all the way
yeah.
back to 4,600.
But do you think there probably would be some sort of liquidation before those sales happen? I think they might want to, trap the early sellers, people trying to breakout traders especially. I feel like a lot of breakout traders would be trapped before the sales happen.
Well, I mean, a lot of people already short this. They're
Yeah,
shorted here, right? Because if you're an Elliott wave trader or a Fibonacci trader, the idea that you sat there and consolidated here, it's worth you taking the risk. So this is
yeah,
where you are buying, betting on this going down. So we're positioned here, not waiting to enter. We're already in this here.
yeah.
So we're not waiting for that confirmation. We're already in this trade here going down with a very tight stop down, right?
Mm,
So most people, believe it or not, are already in it before the big move happens. Because that's, remember, when the institutions are buying or selling, they're doing it slowly so no one notices. And
yeah.
then when people notice, that's when it starts to move, and that's when institutions get huge profits, right? So we're already in it, and then at this level here, we could take off 50 to 75% of our positions off and let the rest ride to retest that low. But by doing this, we already got a 3-to-1 reward risk ratio before we get to the bottom of the consolidation pattern.
That makes sense. That's valid. So basically that would be, that would be like the proper outlook on XAUUSD. I know a lot of day traders are so focused on wanting to take trades immediately and all of these things, but having like a higher time frame understanding of where the market is going to saves you the unnecessary, stress of just being on the lower time frame and you keep thinking, oh, this is supposed to sell. Because if you didn't come to the higher time frame, you most likely wouldn't be seeing the 4,650 level as a major level. All you'd be looking at is just the sell trend, from 4,880, and you're going to get lost in that sell trend without fully understanding that there's a holding floor that could actually keep you stuck in a range. So what you're going to notice is you just keep going, you're going to keep making entries and losing and making entries and losing, except you're a scalper, right? You're on a 1 minute time frame trying to get 10, 20 pips out of the market for XAUUSD. Yeah, most likely that could work for you. But with that being said, I really did enjoy today's call. And if this is your first time attending the live, don't forget to hit that subscribe button, hit the like button. Make sure you go watch the outlook on the next move on our YouTube channel so you have a better understanding on the key levels for the XAUUSD this week. That was put out by myself. Okay. Also, don't forget to hit the link in our bio to get started trading with Valetax. If you're not trading with Valetax already, we have beautiful incentives. Okay, we have very beautiful incentives.
Do you want to share the screen?
Yeah, yeah. We have very beautiful incentives that allows you to trade with our ECN account for as low as just $50 on your first time deposit. And for our standard account, it's as low as just $1. Withdrawal, deposit, and you can do any of those things. And we have one of the best spreads with as low as starting from 0.1. Okay, and 0.3 on our standard account. So make sure you get started trading with Valetax as soon as possible. Thank you so much, Manesh, for today. It's always a pleasure having you and having this discussion. Like I said, I always get to, learn technical analysis afresh from you. Okay, you remind me of the core and basics of technical analysis every time we look at the chart. I love how you view the candles. I love how you give a very good description of this rejection candle. Take for instance this rejection candle here on the 1 hour time frame, right? The hammer candle. You see how it closed bullish and prices didn't really come back to fill it up, and it makes perfect sense with this. Looking at this, for instance, right? This closed bearish instead of bullish, and prices did come back to, try to take it out. So it's always beautiful because you just help. I feel like every beginner trader who okay, my screen is not shared, right? Don't worry, the call's about to end. But it was nice having you guys on the call, and we hope you trade safe. Don't forget the trade idea on the XAUUSD is still live. Okay, so we still have this level here, which is the 4,650 level, which is still the holding floor. So we still have a possibility of this short coming back here before any sort of rejection. So keep in mind the trade idea for XAUUSD. Keep in mind the trade idea for XAUUSD, and would see you on the next ValeTalks live with Valetax. And nice to see you guys. Cheers, Manesh. I'll catch you on
Thank
Monday.
you.
Stay
Bye-bye,
tight.
everyone.
Bye, guys. Bye, Farid.